Less than 10 days ago, Susan and I placed 3 puts on the S&P 500. If we had closed those puts on Friday, we could have realized $19,145 in profits in less than 10 days. Now, we did not close them. Why? Because we are a rules-based traders, and we are playing for much more than that. Let me introduce myself. I am Bagadon at StockMarketCaddy.com. Today is May 24th at about 10:18, a Saturday. 10 days ago, the S&P 500 right up here on Swing Machine was occupying this box right here. Now, there was a possibility, and it was green, that the market was going to go into euphoria. I was hoping it would, but it didn't quite do it. But it was here. The VIX, the fear gauge, was right here. Could have gone lower into panic, but it was right here. That was the signal to Susan and I and to all of our members that we needed to be planning for the counter trade, the pullback at minimum. And we placed the first put, and that put was for June 30th. Strike price was 5,900, which is where the S&P was trading. At that time, the days to expiration when we bought it were about 46 days. It was about 9 or 10 days ago. We paid $11,400 for the put. Now that's quite a bit of money. You could have played the exact same trade using the SPY for 1/10 the cost. Now, for those that have been through our Q school, they know we're not about to lose $11,400. That would have been our maximum risk, but we have hard rules for managing these options, and we were in no way risking that full amount of money. There was risk, approximately half of that. And in fact, the first couple of days, the market languished and went against us a little bit. And this first put could have been down maybe about $1,000, maybe as much as $2,000. And our plan was, in that case, to get a second one on because we had a high degree of conviction in what we were doing. You see, we've done this many times before. The next put was for July 11th, also at 5,900. When we placed that, it was in excess of 50 days. Now it has 48 days, a little bit more time. We paid $12,490 for it. It also went against us. Collectively, we were down about $3,000 or $4,000. Nothing to be too concerned about, but we did have a drawdown because the market had run up. And it was at that time that we placed our third and final, and this was planned. And we got a strike price of $59.35 for when? July 31st. And it had about 70 days. We just did this not that long ago. It now has 68 days. That put cost us $14,710. The 3 puts cost $38,600. That is our maximum risk. One of our rules is not to lose more than half of the premium nor half of the time. The market did what we expected it to do. On Friday, as you can see here, we could have closed all 3 puts for a profit of $19,145. Now, we like to keep track of profit factor, but for those of you that like to track percentage return, that is more than a 50% return, and we held. Because what we know is there's a greater probability that these markets are pulling back. And in round numbers, these 3 puts are in control of $1 $1.6 million in notional value. If, and I don't know, nor does Susan, but if these markets were to pull back 10% within the time frame that we have these puts, the value of these puts that we bought when the sun was shining, the value of these puts to those that will want that insurance contracts when the market is down, if the S&P was to pull back 10%, would be worth over $160,000+. Now, we do not know what the market is going to do. We don't. We never do. It could go even lower. It could. Or it may stable out. But we have rules. We have rules of when we enter. We have rules of when we exit. You see, we are algorithmic, mechanical traders. Stock Market Caddy is a mentoring program. If you want to learn how Susan and I go about trading these markets day in and day out, trading futures, intraday, robot-assisted, trading options on a swing basis, out a few days to out a few weeks, maybe several weeks, be sure to visit stockmarketcaddy.com. CADDIE. And if you have questions, you can email us, and you're welcome to call, even over Memorial Day weekend. And you can reach me at 813-758-8263. We offer what we call the Q School for Traders. It's an individual mentorship, 3+ weeks. We only offer a few of these every quarter. They are filling up fast. It's on a first come, first served basis. You get an education on how we go about trading, but more importantly, if you choose, following the Q School, to want to become an annual member to stockmarketcaddy.com, we're going to provide you all of the tools that we have built over the last 20 years, including this tool, so that the next time the S&P is here and the VIX is here, you'll know, and you'll know what to do. Maybe the next time the VIX is here and the S&P is here, will you know what to do? Will you know how to do it? Remember, folks, the most valuable commodity of all, time. You can't buy it, you can't sell it, you can't trade it, you can't make it, but you can waste it. Hope to talk with you soon. Have a great weekend.